For decades, the story was pretty much set in stone. Wall Street pros were the sharks, and everyday investors, well, they were just swimming in the same pond. But 2025 just completely blew that story up. This was the year something really shifted, and the so-called mom-and-pop investors, they didn't just show up to play. In a lot of ways, they actually won.
And this quote right here, from an individual investor named Josh Franklin, man, it just says it all. They thought retail was dumb money. That was the perception, right? That everyday people were unsophisticated, emotional, always one step behind. And that perception was about to get a serious reality check.
So the big question is, what actually happened? I mean, how did this scattered group of individual traders manage to outplay the professionals at their own game? Let's get into it. Okay, so to really understand how they won, we first have to talk about the stereotype they were up against. And that brings us right to our first section, the dumb money myth.
For years, this was the standard view from Wall Street. Retail investors were seen as, unsophisticated, easily tricked by hype, always showing up late to the party. Their decisions were painted as being driven by emotion, not by any real strategy. I mean, this idea was so common it was even the title of a movie, Dumb Money, which looked back at that whole meme stock craze. But 2025 was the year that stereotype really started to look old and out of touch.
And that whole narrative began to crumble during one absolutely chaotic week in April. This was the real turning point. So let's dig into how these investors started beating Wall Street at its own game.
Okay, so just look at how fast this all went down. It kicks off on April 2nd. The White House announces some steep new tariffs, and that just spooks the entire market. The pros, they get worried about inflation, about company profits, and they start selling. Fast. By April 4th, the market is down by double digits. Total panic. But then, look what happens on April 9th. The policy gets paused, and the market just comes roaring back. That tiny window of chaos, that was everything.
And this slide just lays it out perfectly. On one side, you have the big institutions, and they were running for the hills. But on the other side, retail investors did the complete opposite. They dove in head first. In fact, on April 3rd, while the market was tanking, they bought a record-breaking $3 billion worth of stocks in a single day. They weren't panicking, they were shopping for a discount. Now here's the most important part. This wasn't just blind luck. It was a strategy. It was a conscious decision. So let's take a look at the new playbook they were running.
So according to one finance professor's analysis, a key part of this was a strategy they were calling the taco trade. And yes, it stands for Trump always chickens out. The whole idea was built on a really simple belief. When a dramatic policy announcement scares the market, it's probably going to get walked back pretty quickly. And when it does, that creates a perfect and very profitable buying opportunity.
And that conviction fed directly into their number one strategy for the year. Just buy the dip. It's a simple concept, right? But it is so hard to actually do. When everyone else is selling out of fear, you do the opposite. You buy more. And it turns out 2025 was the second best year for this strategy since the early 90s. Retail investors didn't just try it, they absolutely nailed it.
But they weren't a one-trick pony. After that crazy week in April was over, analysts at JP Morgan noticed they changed tactics. Starting in May, retail investors started to move away from picking individual stocks and began focusing more on ETFs, exchange-traded funds. They're basically just baskets of stocks you can trade like a single share. And one of those baskets in particular really caught their eye.
They went absolutely huge on gold. I mean, the amount of money that flooded into the big SPDR Gold Shares Fund in 2025 alone was more than the last 5 years put together. Think about that for a second. It was a massive concentrated bet, and boy did it pay off. The fund shot up more than 65% for the year.
So they had a clear strategy, and they executed it brilliantly. Which brings us to the payoff. Let's look at the numbers in our next section, the surprising results.
First, just look at how many people got in on the action. The amount of money flowing from retail investors just exploded to record levels. We're talking up more than 50% from the year before, and even higher than during that whole meme stock craze in 2021. More people were in the game than ever.
And here it is. This chart is really the knockout punch. According to JP Morgan's data, the results were just stunning. That tall bar on the left, that's the average retail portfolio, the stocks and funds picked by everyday people. And they were more profitable than the professional funds that were focused on hot areas like AI. They even beat the entire market, which is that S&P 500 bar on the far right.
So yeah, the verdict from all the data is simple and it's crystal clear. The stocks and the ETFs picked by individual investors just plain made more money. The dumb money was suddenly looking really, really smart. All of this, of course, just begs a much bigger question. Was 2025 some kind of a fluke? A flash in the pan? Or are we actually watching the market change in a fundamental way? Let's explore that in our final section. Is this a new era?
A lot of experts are arguing that this isn't the same type of investor we saw a decade ago. Today's retail investor is just getting more sophisticated. I mean, they have access to the same high-quality data and research as the pros now. Analysts also say they're more focused on long-term investing, which helps them avoid panic selling. Plus, you've got this whole younger generation coming into the market with a brand new mindset.
And this quote from Mark Mollick over at Siebert Financial just hits the nail on the head. He says retail is getting hardened to the market, which means they've been through the ups and downs before and they've learned from it. His conclusion? They really are growing up.
And that leads us to the final billion-dollar question that even the experts are asking now. These strategies, like buying the dip, have worked incredibly well in a market that, yeah, it has its dips, but it ultimately keeps climbing. So what happens when this new, empowered generation of investors has to face its first, truly long and painful rough patch? That is the question for 2026 and beyond.